Hello, everyone. Welcome. Today, we're going to go through the US results and, of course, the US session and a bit of a briefing of what happened so far in August. So, welcome, everyone. Hope you fall and you enjoy today's session and feel free to ask anything you want. We are here to help. So, stick on your question box either below the comment section, section. Any questions, any asset that you want me to cover, anything you need, we are here to help. So as I was saying, today we're gonna go through firstly the US economic data. We had GDP today and jobless claims, and I'm gonna try also to cover in general where we're standing, basically what leads the market, what factors affect the market currently, and what happened so far in August, since we are in the very last 2 days of August. Is This week is the month end, is the weekend. We have seen already occasionally throughout the week some profit taking conditions, and this is something that we might see also tomorrow and tonight basically as well. So let me just try to share the screen as well. I can see it's time. Hi Ronald, hi Joshua. So welcome everyone. Okay, perfect, we are ready. Let me refresh a bit the calendar and share the calendar with you as well. And here we are, entire screen window. Let's Google Chrome. Here we are. Okay, perfect. Here we are. I'm sharing right now, guys. I'm sure you can see it. Yes, you can. Perfect. Sound is fine. Excellent. We're good to go. So hello, guys. Hello. So as I was ready to analyze what we are currently what we have what just released. Basically, we have the GDP number out of the US for the second quarter, the preliminary number. It was a very important, and it is a very important number in order to see the growth of the US economy. And we had also the jobless claims, both the initial ones and the continuing ones. So basically, what we have over here, as far as I can see, is okay, pretty in line with expectations, very close to the forecast, and slightly above the previous reading. The previous reading, by the way, was revised lower, unfortunately, for the continuing jobless claims. This is what I'm referring to. And the initial jobless claims are also in line with expectations. Also, a revision, actually revision slightly higher, but then the numbers are so close to each other that they don't really indicate any, they don't really amend the so far outlook for the labor market. This is what I'm trying to understand over here. So jobless claims, both initial and continuing, in line with the expectations. On GDP, however, both the annualized one and the monthly reading, we can see that both readings actually beat expectations. So 2.5% against the 2.3 that was expected, and the annualized one reached 3% from the 2.8% that was forecasted. So let's shift into the dollar to see whether there is any reaction from the US dollar, even though the US dollar in general has been seen. Sorry, let me share the screen. Has been seen recovering some losses so far today, and actually since yesterday, to be honest, since yesterday afternoon. And window. Here we are. Perfect. Okay, now you can see this is, guys, this is the dollar index in a 30 minutes chart. I'm gonna stick it on the perfect. I'm gonna stick it also below so you can see all the time which asset I'm covering. This is a 30 minutes chart, and you can see that after a very a significant decline last week and also in the beginning of this week, we have seen that the dollar has recovered some losses. Not nothing that really changes the overall picture for the US dollar. However, as we can see, it seems that is gaining some traction and is moving a bit higher ahead of the basically of tomorrow's PCE day, but also remember that it's all about repositioning in the month end, all about repositioning, and it seems that the dollar is higher considering also the growth apparently for the US economy, that it seems that it has boosted the readings, seems that they have boosted actually dollar further today, even though this is a boost that we have seen since actually since Wednesday afternoon. Yeah, that was around then, well, that we've seen this rebound for the dollar, as you can see. Um, so a lot of things, a lot of factors are responsible for this rebound. Okay, we need to consider also that the dollar is mainly affected by the central banks, and not only the dollar. I'm referring to all the major assets. So it seems that markets are repositioning themselves on based on what is expected from the central bank's outlook, with the ECB and Bank of England expected that they won't change anything in the next meeting, and they might proceed with the rate cut either in October or November, while for the Fed, however, the September's rate cut actually has already been priced in. So what we are seeing over here, it might be a bit of a buying the dip condition. So let's wait and see. Nonetheless, at least for the 30 minutes chart, the one that we are seeing right now, we can see that there is an increasing bias. Already the asset, look at that, it broke the previous swing high, a nice rounding bottom in the near term with, okay, I need to shift that backwards so you can see also, my head is over here and you cannot really see. Sorry for that. Let me hide completely the navigator. Yeah, now it's much better. So as I was saying, this this bounce, actually it's another bounce higher, is supported also by the technical indicators. You can see that the short-term MACD that I'm using for intraday, for short-term time frames such as the 30 minutes chart, has already posted an hour ago, actually more than an hour ago, a bullish cross, and it seems that there is further steam to the upside. RSI, even though it crossed above 70, is still pointing further to the upside. So there is further steam in the very short term for the dollar further to the upside. I will zoom out a bit. I would like to show you this immediate resistance zone over here. Is a resistance zone that we have seen last, actually should be around Tuesday, Thursday last week. Yeah, actually, yeah, Wednesday, Thursday, Tuesday, Wednesday, Thursday, yeah, until Thursday. From Tuesday until Thursday last week, we have seen that the asset retested several times, as you can see, the 101.50 level. 101.50 level. So this is the immediate resistance level, key resistance level for dollar in the short term. Still, once again, MACD point still pointing higher. Stochastic still pointing higher. RSI the same. It seems that there is some further steam northwards. However, just to clarify something, that doesn't change the fact that since April, dollar has been under significant pressure and actually into a negative outlook, and that remains the case. Remember that the central banks, the prospect of further rate cuts, the inflation, the cooling labor market, everything everything actually add pressure on the dollar. Remember that markets are always ahead of themselves. They always pricing, let's say for now, as I mentioned, the 20 the rate cut for September has already been priced in. So and also the November's rate cut also partially priced in. So remember that the dollar weakened the last few months on the prospect of rate cuts. So some of these rate cuts have already been priced in. Okay, that's why we had this steep and sharp downwards trend from 106 territory down to 100 zone. 100 zone, which is an area that has never been reached the whole year. Actually, it was December 2020. Since it hasn't been reached since December 2023. And if I go further higher to the weekly chart, you can see that we are at the very close to a to 2 years support level. So I'm referring to the $99 to 100 zone. Okay, if a, a break confirmed break below 100 could retest $99, obviously, but it's not only that. You need to keep an eye on this zone in general, because if the dollar uh, breaks the $99 decisively, then it could lead to a free fall. It could lead to a free fall to it could attract further sellers, and we might see levels that we haven't seen since 2020. Okay, but this is if we see eventually within the next month a decisive break, and a move below $99. That could, the $99, guys, it might already be a very significant level for many traders with a lot of pending orders, possibly hiding at $99. So have this in mind, okay? These are support levels that you should keep monitoring for the dollar, at least. Remember, as soon as okay, the September's the FOMC rate decision is on the at the 18th of September, but before that, we have, if I'm not mistaken, we have the non-farm payrolls next week. We have inflation the week after. So or any US economic data that add to the odds of more and more rate cuts, or an even more an aggressive rate cut in September, or a really aggressive rate cut in October or November, in general, if the economic indicators uh, suggest that Fed should get more aggressive and, and adds to the scenario of 50 point rate cut, 75 point rate cut, this is something that could break that 99 level and could open the doors downwards. So this was pretty much for the dollar. I think I covered significant, at least significant, fundamental um, uh, points for the dollar. So have this in mind. Keep an eye on the news. Keep an eye on the Fed speeches. Keep an eye on the U.S. economic data. With the next one, as I said, is the NFP next Friday. Obviously, we're gonna have a live next Friday during the NFP as usual, and the week after will be the U.S. inflation. It might be the hot data of the month, especially now that we have seen the labor market finally finally how can I say it? Finally cooling. Okay, so we had what's this so far basically the jobless claims even today. Okay, to be honest, guys, let me go back. Even though they came in line with expectations or really really close with expectations, uh, um, the fact that they are growing, okay, the fact that they are growing is something that supports that the upcoming NFP number, the August NFP number, could actually uh, could actually um, 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 cool a bit. Actually, we are expecting that this could um, restrict a bit the NFP number, and that would be a confirmation for the Fed that the market is finally and the economy is finally ready for some rate cuts. Because what we have seen so far, just explain a bit, okay? Sorry for, I think I just saying too much, but just to explain how these data affect the market and affect um, uh, the near term performance for the dollar especially. So as I was saying, what we have seen so far is the continuing and initial claims climbing since April. Okay, quite tight path, relatively tight path, but climbing. Okay, this is something that we haven't seen the past years. It finally started happening since April this year, and it's not only that. We have seen also that was the wages actually. I've seen that the wages also improved significantly, as I can see in my calendar over here. Um, so this is something that could indicate that the non-farm payrolls could slow down a bit. This is what the Fed needs. It needs to see that the labor market is slowing down, and it also needs to see inflation slowing down in order to be convinced to proceed with the rate cuts. They have already confirmed. I don't want to confuse you. They have already confirmed the 25 points rate cut for September. However, this data could either confirm them whether there is enough room to, instead of 25, to be a bit more aggressive and cut by 50 points by 50 points in September, or whether they should do it gradually, a month after month. So it's all about timing. It's all about the size of the rate cut. Okay, that was it for now. We're gonna cover everything again and again next week in our live analysis, in our trading sessions as well. So I'm gonna leave it up to this point for now. So hello, 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 Peace TV. Good morning, Caston. Good morning, Joseph. Hello. Dollar is a sell symbol. Overall, yes, the outlook remains negative for the year uh, due to all the things that we have just mentioned, that we have just explained. From a technical perspective, now, there is another rounding top being developed, not confirmed, being developed. This is the weekly chart, but it's still above this important support level, support zone to be precise. Momentum has turned negative, but further confirmation is needed. As I said, we might see a rounding top, but as long as the neckline hasn't broken, it doesn't mean anything. It could quickly reverse, like what happened here, here, and so on and so forth. Now, currently, this swing higher we have seen the last 3 days in a row, they have a key resistance at 109 101.50. So it will be key to see in the next few hours whether that resistance will be broken or whether we're going to have a reversal lower again. A failure to break this resistance area could indicate that that was just a buying the dip condition, and basically an attempt from the market participants to push the dollar slightly higher in order to sell at a higher price. Okay, sorry for that. So let's move on. Let me check your questions. Come on. Also, try to find the breakdown of the GDP today to see whether there is anything important, anything that could um, suggest. Yeah, nothing, guys. Is what we said. In the numbers were so close with the forecast and with the previous readings that there is nothing there to really suggest a change, at least a change on a change of the FOMC outlook. So FOMC is still basically the data are supporting that the economy is still quite strong. Obviously, tomorrow's PCE numbers will bring some more light, and they are anyway a bit more significant data than today's numbers. Today was just a confirmation that the economy was as strong as the earnings reports this quarter show. So nothing really new, nothing to support from this data today that the Fed could cut 50 points in September. No, so we're still at 25 points. But anyway, we have a lot to see ahead of us. We have, as I said, tomorrow's PC, non-farm payrolls, inflation before the rate decision in September. So today's number were quite strong, undoubtedly supported further the dollar, but that's it. It's just for the near term. It might be a limited move. So, Isaac, hello, Isaac. It was dollar there. I was Joseph. I'm trying to on the bottom you can see that is I have a caption, so I'm trying to amend the titles every time that I'm changing the asset. We still on the dollar. Actually, we have covered only dollar. I just did a 30 minutes analysis, 1 hour analysis, daily, weekly, and we cover everything from a fundamental analysis for the dollar, for the Fed, for the US economy. So, guys, no, we are not only analyze dollar. I'm waiting to tell me what you want me to cover. Otherwise, I'm gonna continue doing my favorite assets, such as okay, the majors basically gold, oil. And so on and so forth. But if there is anything that you want me to cover, feel free to stick it below the on the comment sector section that we have below YouTube or Facebook, Twitter, whatever you're using. Feel free. So next. I'm gonna shift to the euro dollar. Okay, right. um, let's change the caption as well. So here we have. Come on. Perfect. Euro dollar right now. Gonna start with the daily chart. Okay, sorry for all this mess. So here we are. Perfect. Okay, this is the euro dollar in a daily time frame. I'm sharing the daily only because I want. Sorry for that. Just a second. I want to show you. I had it on my something that I posted yesterday on Instagram. I don't know whether you are following us in sorry, not Instagram, in Telegram. I'm not sure how many of you have it Telegram, but we are sharing a daily basis some thoughts, some something that we have spotted, some market news. So yesterday. And the day before I actually submitted several times the last 2 weeks the euro dollar, but yeah, it was when we had seen the day before that break of the ascending triangle seen in August. This is the 4 hour chart, 4 hour chart euro dollar, in which we have seen excuse me for that, sorry for that, in which we had seen yesterday, mid of the day before the US Open, we have seen the break below this ascending triangle. Is not ascending channel, sorry, up channel, which obviously, as you can see, triggered a lot of selling pressure, and we have seen that euro dollar since then is moving lower and lower and lower. And actually, so far today, it bottomed at 110.70. That's a very important level, and I will explain right now why. At least for scalping, for intraday traders, and etc. So I'm gonna sticking my fractals as well. Okay, and gonna look at that over here for 1, 2, 3, let's say consecutive sessions, 4 hour sessions. We are seeing that the asset managed to find some support at 110.70. This was a nice level, support level, because we have seen it. Let me zoom out in the 1 hour chart so you can clearly see that was a nice block back on actually it was Monday last week. A block was created over here, and it seems that it provided a nice support level, at least for the day, for euro dollar. However, considering how big these candles are, the fact that there are no tails at the top of these high Kenashi candles suggests that there is an increasing bearish bias. And because I don't know whether we have beginners over here or what level of traders we have. I'm gonna stick also some MACD and RSI just to double check together whether the momentum indicators are in line with this scenario, or they could confirm this increasing bearish bias. RSI. Okay, perfect over here. Well, you can see, guys. You can see this is the 1 hour chart, by the way, just to show you that MACD resume and move lower. So again, the fact that the histograms are below the signal line and they both pointing lower, RSI returned back to the 30 zone. So not oversold yet, but very close to it. That actually supports the intraday negative bias. So and break, at least for scalpers, and move eventually in a break below 110.70, it could open the doors to 1045. Basically, it's another important near term level, support level, that it used to be a resistance level back in the mid of August. Okay, this is for the short term. This is for some intraday and support levels, short term support levels, immediate support levels, if you want to call it. But you see that there is a decisive uh, selling pressure. If I try to understand from the body of the candles, there is pressure, but as always, you need to wait for a signal. You need to wait for a confirmation. So a confirmation could be seen as soon as we see the asset breaking the 1070 territory. Okay? So why this happened? How come? I mean, even though we have general overall a weak dollar, and so far euro was benefiting on the dollar weakness, what changed? Basically nothing changed. Overall the dollar is still weak. Okay, we have seen the last 2 days itching higher, and indeed, and we have seen euro selling off, but the euro has sold off not because of the dollar. It's looking to be in a sell off the last 2 days, only due to the fact that we have seen growing confidence in another rate cut from the ECB. We had seen the inflation data from Germany, from Spain. What else? What else we have seen? I think these two. So that could give arguments to the dovish members of the euro to push the ECB for a rate cut in September or October. In the beginning of the week, we couldn't see something like that. We couldn't see this scenario escalating. Okay, based on the comments from the ECB, based on the latest data, the cautious tone that they were using lately, we could see that the ECB and Bank of England as well might hold rates unchanged for the next meeting, and they might wait for further confirmation and proceed in the uh, in the meeting in a meeting in October. However, with the data, with the latest data and the consumer, basically on the confidence data, things had changed a bit the last 2 days, because the data, as I said, support that the ECB could needs to proceed with a rate cut next month. So let's wait and see. And that's why we have seen this sell off in euro, at least, and breaking that 111 mark. It was a very important level, round number, and currently it remains below it with some further steam lower. But it's not only that, it's also some profit taking conditions. Don't forget that it's month end, is week end. Big players repositioning, closing some existing positions, repositioning for for the new month, changing their portfolios and their positions. Now, okay, so remember 110.70 is being retested. The break could open the doors to 110.46. For the time being, it does that, but this reversal need to be closely monitored. However, this is the daily chart. However, it doesn't indicate a reversal of the trend. For any day traders, guys, you need to keep an eye, okay, on this reversal. Okay, we had a significant reversal. We need to wait and see how the week will close for euro dollar. But momentum is still positive. Okay, even though RSI is very close to 50 zone. So this is definitely something that we need to monitor tomorrow and also next week, because if the asset, if euro dollar continues lower, more precisely, if it returns back below the one the 110.30 territory, 110.30, that could indicate that a new trend is being developed or is starting a downtrend this time. But yeah, we need to wait and see. We need to wait and see for sure. Momentum is quite aggressive, so yeah, keep an eye on that. So, any questions before I continue with the next asset? Aussie yen, of course. Aussie yen, okay. Euro dollar is buying. I cannot really tell you what to do, Cosmas, okay? What I can tell you, okay, is what I see. As I repeated, right now, intraday in the short term time frame, we can see that there is a lot of selling pressure. However, the asset is still retesting for 1, 2, 3, 4, 5 for the for the last 6 hours, the 110.70 level. A break of that level could indicate the retest of 110.45. Okay, so intraday we have a negative outlook so far. In the daily chart overall, it has been in a nice strong rally with a correction seen so far today and yesterday. A reversal of a trend could be confirmed if and only if we see the asset breaking below and moving below the actually 110.30, or to be more precise, the 110 is the key level. It's a 000 number. But yeah, let's keep an eye on the 38.2 Fibonacci level for now. And we're gonna see again next week. Okay. So, what is the name you're using in Telegram? It's HFM, just HFM. HFM, Wema. There are a lot of HFM accounts in Telegram, but if there is a tick, if that is the official one, follow it. It's us. Subscribe. You can find the HFM, the main one. You can find HFM in your the localized one. Depends on where you are in where you live. But if it has the that confirmation that is indeed the official channel, then don't hesitate to follow it. If it is not our me and Mihalis updates, it will be one of our colleagues, so don't worry about it. Aussie yen, I haven't forget you. I haven't forget you, dear Nicole. So Aussie yen. Okay, let's cover Aussie yen. Okay, Aussie yen. Let's find Aussie yen. No one asked about gold. No one asked about dollar. No one asked about, sorry, gold, oil, Nasdaq this time. Uh, Aussie, Aussie yen. Here we are. First one. That's weird, Nicole. A lot of consolidation is what I have seen over here in dollar yen, at least in the daily chart. So after this significant dip that we down leg that we have seen, since July, it's very very neutral in August so far. Basically, it's ranging for 2 weeks in a row for the last 2 weeks, ranging between 97 and 99 territory, below the 50% Fibonacci level, basically below this down leg. So very neutral overall. Okay, let's go down to the 1 hour chart and see why it triggered your attention. Actually, I can see why it triggered your attention, because it has been in a rally since Asia session. Up, 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 up. A bit of a consolidation, indecision over here, and then up, 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 with uh, bigger bullish candles um, uh, uh, during the US session. Okay, so we can see that bulls are back in play with the next resistance level uh, to 99 levels. So yeah, there's a lot of bullish bias intraday there, Nicole. Um, you're wondering whether this will last by okay, that candle hasn't closed yet, but let me go down to the 30-minute chart. As you can see, we have the last two sessions. We have the body of the candle is quite big, significantly big actually. That suggests that there is further steam to the upside. There is still some an increasing bullish bias. So RSI is at 64, steady, slowing down a bit, but still is at 64. So it's like flattened mainly. Stochastic also remains above 50 zone, ups and downs, but remains above it. The slope basically is flat, because you see the the slowing indicator points down, but the fast one points up, so it's like neutral. So there is no indication of a pullback. There is an indication that the asset has further steam to the upside, with a bit of a consolidation seen as well. So yeah, still, let me just check my intraday the intraday setup that I have, which doesn't involve Heikenashi, but instead is normal Japanese candlesticks with the 5 and 9 exponential moving average. So look at that. Uh, okay, mark this up. RSI is flat, but above 50. Stochastic also flat, but above 50. So my basically 99 resistance still holds, but because the asset is oversold, it seems that there might be some consolidation seen for the next few minutes, or at the top of for the next hour, before another attempt to the upside. But overall, there is no indication of a reversal. There is just the need of a correction because it has been overbought. Sorry, you can see that it's outside the Bollinger Band, so it needs a bit of a. We'll see a bit of a consolidation in the very very short term, in the next few minutes or possibly an hour. But yeah, that's pretty much it. Moving average, I keep pointing higher. There is not there is no indication that we're gonna see a reversal right now. The only thing that I can see is that we might see a bit of consolidation, so steady at this zone over here. A reversal conf- could 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 be confirmed if we see sorry, if we see the asset moving back below the 98.65 level. Okay, hopefully that helps, dear Nicole. Guys, gold. Oh, okay, I'm missing the auto chart alerts on Telegram. Haven't seen you guys post it. Okay, this is something that we're doing manually, dear Cosmas. But in order to make sure that you're not missing any auto chartist alert, correlation alert, signals, etc., why don't you actually enable the auto chartist emails? So if you visit my HF area and select auto chartist, you need to uh, uh, click on getting alerts, email alerts for every single session. That is the EU session, the US session, and the Asia session. And you will have it like regularly in your inbox for every single session and every single type of alerts, correlation alerts, as I said, signals, economic alerts as well. So yeah, gold. Okay, guys, gold. Clear a bit this mess. Perfect. As you can see, I'm not sure whether. Okay, that's a very old. That's a very very old Fibonacci level, basically this one. But on this correction that we have seen back in May, um, you see that the asset has already reached these Fibonacci extensions. But nonetheless, okay, it's done. It is what it is. It's already over. I'm gonna delete it and move on. So went down to the daily chart. The gold in general has been very very mixed the last 2 weeks. Holds gains indeed. It's very very close to the record highs, and I'm referring to the 25 30 zone, but is consolidating for the past 2 weeks. Okay, so well supported by the central banks. The haven flows as well, especially with the uncertainty and the escalation, basically the escalating tensions in Middle East, but is consolidating. So you need to keep an eye, at least for the medium term, on this zone over here. So somewhere here, yes, in the 24.77, 25.25. This is in the just lines, trend lines, support and resistance levels that you need to have on your charts in general. Now, I understand that you might trading the short term intraday. So gonna stick down to the 30 minutes chart once again. So we have seen the gold extending higher overnight and in the European session as well, but failed to extend to record highs. And we have seen a nice pullback over here bullish, 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 small body one, small body one, bearish. Confirmation for a pullback came with the next candle, which was a larger body one with no tail at the top, returning back to the Asia session lows. The very next one, another move lower, and it keeps going down and down and down. So the next, yeah, that should be the round. The 2500 is the very next support level for you for gold. I'm afraid. Let me just, yeah. Can you see this, guys? Has already breached 50% Fibonacci level, so the mid of this rally. If I use only the body of the candles, then still it's already broken. It's already halfway. Okay, so considering the body of this candle, the fact that the last hour it crossed below 50% Fibonacci level, it seems that gold could return back and retest once again the 2500s territory. Yeah, RSI already fell below 50s at 41 and sharp actually decline. Yep, 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 yep. And let me just double check something. It is what it is, basically. This is something that initially was triggered. Yeah, we are. Yeah, it was triggered actually an hour ago. You see, that was a nice smooth trend. Broken it the an hour ago, closed below it, and keeps moving below it. So, yeah, there is some selling pressure, which it seems that is still in control. So sellers are still in control. And let me, so 2500s is then is the once again could be retested similar to to Tuesdays and Mondays bottom. And I will get rid of Heiken Ashes and check also the intraday. Yeah, here we are. Beautiful, beautiful. You have a confirmation as well. You had basically, because it was an hour ago, a bearish cross. So anyone that is using intraday moving average has already possibly entered this move or noticed this bearish signal. We have a bearish signal between the 5 and 9 exponential moving average, broken the long-term moving averages. Stochastic is still low. There is no indication of a reversal. RSI is below 42. No indication of a reversal. It's just flat. We might see a bit of consolidation because it's oversold, but it seems that the momentum is still increasing southwards, so lower. Yeah. Yeah. Okay. Guys, okay, Nasdaq. Last but not least, basically the stock market was a bit was under there was a, entering was in red basically this week. Something that added to the decline that we have seen, especially yesterday, was Nvidia. However, as you can see, so far today, Nasdaq managed to recover some gains, and it's moving higher. It's above pivot point, regardless of Nvidia's dip. We can see that um, it's also, it might be September seasonal. September seasonality is something that we need to keep an eye on. However, it is what it is. We have seen some improvement, we have seen some rebound, even though it doesn't look. Let me just get back to the intraday basis, to the intraday setup, and I will return back to high and ashes later on. This is the 1 hour chart for NASDAQ. Let me captions NASDAQ. Here we are. NASDAQ, we have seen a recovery as you can see, but the last 5 hours in a row, it is consolidating. Can you see that? Consolidating for the last 5 hours in a row, failing to break the 50-day moving average. And the fact that basically, okay, the momentum indicators are quite bullish, not significantly bullish, but RSI is above 50, stochastic remain close to 80, MACD has improved significantly. We cannot really claim that this is a bullish signal, but we need to keep an eye on this ranging market, because a break of the upper barrier of today's range, let's say, basically a move above 19,514 15, let's round it up, it could bring the asset back to yesterday's peak, okay, even though it looks unlikely, but it is what it is. We need to keep an eye on this ranging market. A break, as I said, of this double top, okay, it could retest 19,600, 600, um, 600 territory. At this is, yeah, that looks a bit weak. Okay, moving average, I keep pointing higher. Yeah, but you need to wait for a confirmation, guys. If this double top breaks, immediate resistance levels are 19,600, rounded up, 19,600, and yesterday's highs, which is, how I place it properly, yes, 19,685. So these are the two resistance levels if and only if the asset managed to break this double top. I'm not referring to retesting it, I'm referring to actually break it, closing above it. Okay? Yeah. Yeah. Oh, okay. Nice. It already broke it. It already broke it. Let's see. So, yeah, but this is still developing. Let's shift to the 50 minutes chart. Nice. But will it last? That's the question. We need to wait for the candle to close to see whether it will manage to actually. But it broke it and it keeps moving higher. That's a bullish signal in the very short term. Stochastic is keep pointing higher. Yeah. Wow. Nice. Nice. We were talking about, and it happened in a second. Okay, it was. Ooh. Let me check whether there's anything that I haven't seen, whether something happening. It boosted further Nasdaq higher. Okay, it's the US Open, but nice. Okay, guys. Nice. Nice. Okay, I think that's pretty much it from Nasdaq. overall in a pullback. So this boost that we have seen just now is just for the near term. So he keep an eye on the resistance levels that we have just covered. But intraday, remember that we had a pullback the last 5 days in a row. So we need to keep an eye on this 20-day moving average and 50-day moving average, because it could clear a bit this the picture, could clarify whether the asset it could return back down or it will resume losses. I've seen your question, your request, Hinor, right now. Last but not least is pound yen, which consolidates a lot. A lot of concentration, however, that's a huge candle the last hour with a bullish cross. But this, we just, this is the boost that we have seen on the US data release, but it already started fading. So we cannot really tell right now. Miracle is at the top of the range. There was an indecision, a doji candle, so you need to be a bit careful with this one. You need to wait to see whether there will be any bearish signal, any either a candle. Basically, if in order to suggest that you need to measure this bullish candle, okay, and if in the next few minutes, hour, the top of the hour, etc., you see a move back down to 191, 190.90 to be more precise, that could suggest the return back to this bottom over here. So if it reverses half of these gains that we have seen with this huge candle, then that could indicate a shift in the sentiment and a return back to the 190.20 level. Okay, that's in the near term. Now, in a daily basis, very, very similar with Aussie yen, consolidating. So you need to keep monitoring this double top and the 200-day moving average. Is looking like an ascending triangle to me with a flat top. So yeah, guys, that actually is an interesting cross, because we have a key resistance at the top. Actually, it's an ascending triangle, as I said. So something to add in your monitor list. Now that the August is it's nearly over and we have a new month. So yeah, moving into an ascending triangle. Intraday, as I said, 190. Oh, sorry, I missed it. Intraday, the asset, it seems that it ran out of steam to the upside. It's looking like that this rally has faded, but only a return back to 191 level could open the doors, could indicate that it could retest the bottom of the triangle. Okay, a very nice um, triangle that could eventually help, but for the time being, the asset is just consolidating. Add this line on, because if once as the asset managed to break either above the triangle or below it, that would be a clear indication on whether there will be an upwards trend in the medium term or a pullback. Is in the medium term. For the time being, it's just consolidating. So yeah, for now, dear Miracle, sorry, There is nothing really exciting right now. Just to put some alerts, just to be aware whether the asset return back to 191 level, or an alert also to the upside in order to buzz you if the asset extended above 191.50. Okay. I don't know what I have said, Miracle. Is that the pullback on dollar Swiss on the 5 minutes chart? Ooh, 5 minutes chart. Let me check. Dollar Swiss. Let me share your my room street. Let me share your dollar Swiss. I think I had dollar Swiss. I don't know whether I. Okay, no, nevertheless. Dollar Swiss, 5 minutes chart, for God's sake. So, is that the pullback on dollar Swiss on the 5 minutes chart? I don't see a pullback. I can see a rebound with the next, with the immediate resistance level back to 84.77 level. Up, corrected, up, corrected. Let me check my. But yeah, they're bullish. No tail the last 5 minutes. So it's like it's ready to return back to this high before another attempt to the upside. But let me check also. Sorry, let me check also my other intraday. Even though this is not for a 5 minutes chart, but correction. That's the pullback that you are talking about. A bit of a reversal, doji. We need some clarity over here. Definitely, the break of this short-lived descending channel. It was a bullish signal, but the two consecutive doji candles, the flat moving averages, is something that for now suggests that there would be further consolidation. Yeah, yeah. Don't know what you're looking. It's just consolidating right now. 1 minute chart, doji, side. A pullback could be triggered if the asset moves below 84.65. That would be, let me just be precise, 68. That could indicate few pips move, like down to 84.60. But yeah, it's quite douchey, quite sideways, my room street. I don't know what you're checking right now, but mm, mm, if you can't see it, then don't trade it. Okay? Mm. Overall, I should confirm, yes, I should admit that overall dollar Swiss, as the Swiss in general has benefited on the dollar weakness. So this is a daily chart. It has been to the downside. You see, down, a bit of a correction, another lower low, bit of a correction, new lower low. So it has been, Swiss is benefited on the dollar weakness. Today we had a nice rebound, returning back to Wednesday's performance, actually Tuesday's performance. but it seems that it's already overbought, and consolidation will be the theme of the next few hours because it's oversold. It's overbought. Sorry, overbought. RSI flatten, MACD flatten. Yeah, it needs a bit of a correction. So a bit of a consolidation might be seen around 8470 territory. I cannot really see, at least for now, what you're saying about a pullback. My bad. I don't know. At least in this 5 minutes chart. No. Consolidation. I'm afraid the only thing that I can see is a consolidation. Um, and that's pretty much it for now. Yeah. Anytime, Cosmas. Anytime, anytime. Though, okay, let's finish the day. Let's call it the day with dollar ZAR. Dollar ZAR. Actually, I think has been a significant mover, especially overnight. Where's my dollar ZAR? Dollar ZAR. Yeah. And it keeps moving higher apparently. The last 2 hours after the data, basically, we have seen a complete rebound. Look at this beauty. Thank you for bringing that up, Owen. This beauty. Look at this beauty. Does this ring the bell a bit? Something that you had seen. Are you trading ZAR, basically? Please, should we check pound? I should pull back in order for it to continue to be damaged. Okay, you're a scalper. Okay, I got it. I got it. Okay, so I'm gonna get back to it, my room street and Miracle. Don't worry. I will get back to cable as well. So dollars are a nice, beautiful, absolutely beautiful morning star formation. Morning star formation. Nice, clear. Moving averages, my two moving average, the 5 and 9 exponential moving average in this 1 hour chart are ready to be bullishly cross. Okay. Already retesting the 20 period and 50 period moving average. They are strong bullish candles. So the next resistance is seen at 17.80, just few pips higher. Basically, is the latest two swings over here, two fractals, and also coincides with the 200 period moving average. And obviously, yesterday's peak at 17.84. Let me check something. Boom, bap. Yeah, nice. No. Nice, smooth, bullish cross. Morning star formation in the 1 hour. If we check also the indicator, we can see that stochastic jumped higher and keeps pointing higher. RSI the same, just managed to cross above 50, very close to 50 still, but keeps pointing higher. So there is further room to the upside with the very next immediate resistance at 17.80. So ATR, it says ATR is at 39, and that should be 39, 37. So it's twice the ATR. Okay, nice and smooth. Pound dollar. Pound dollar. Pound dollar. Here we are. Continue. Basically, nice. So guys, basically it rejected and broken finally these double low fractals. It broke it and it's just open the doors to, that's the cable. It opens the doors to 130, 137. Let me just put the 1 hour chart. I'm gonna use some Fibonacci extensions as well. Beautiful. So it broke this bottom that has been seen the whole week. The the double fractals over here, high Kenashis, no tail, big body bearish high Kenashis. So the next support for cable is down to last week's basically resistance level that now has turned into support level, and the 161 Fibonacci extension. So 131, 35, 131, 20 territory. That's the next support level. Is looking like an M formation, but we cannot really tell. Or a head and shoulders, basically shoulder, head, shoulder, neckline broken. That's the very immediate support level. If that breaks as well, then you need to keep an eye on 130, 60 territory. Nice and smooth. And I guess that euro dollar also broke that support level that we were talking about. Euro dollar. Euro dollar, euro dollar, euro dollar, euro dollar, euro dollar. Come on. I'm gonna bring back my Heiken Ashi. Here we are. No, it didn't. Okay, remember that we said that we need to keep an eye on the 111, sorry, 111, 1070 territory. Euro is still above it, still retesting it. So yeah, the selling wasn't as aggressive as in pound, but very interesting. Thank you for bringing that up, Miracle. Nice, clear pullback, deep breaking this double fractal. Very nice. If I use my Fibonacci's as well, they should confirm this move as well. Yeah, and this zone as well. Nice. Very nice. Beautiful. Yeah, beautiful. So my so pullback in order for it. Let's get back to the ZAR. I don't want to leave my room to the ZAR. Was it in ZAR? No, it wasn't in ZAR. It was on dollar Swiss. Dollar Swiss. Dollar Swiss, dollar Swiss, dollar Swiss, dollar Swiss. Where have I put it? Lost it. Dollar ZAR. Come on, Andrea. Need a zip. Okay. 5 minutes. This is high Kanashi, by the way. Before, sorry, this is dollar Swiss, you said. Dollar Swiss. Where's my dollar Swiss? Dollar Swiss. Sorry, I got a bit. Like, here we are. Perfect. So you said that I saw a pullback in order for it to continue to the upside. I'm a scalper. So you saw a pullback. Yes, I can see this pullback. I guess this is what you're referring to. Or this doji one. Hmm. Let me add some. Okay, indeed, this consolidation, it looks just as a correction before another attempt to the upside. I do agree with you on that, Myron Street. However, now, right now, we don't have nothing. For me, it looks like a consolidation, especially because of these doji candles. So, um, resumption to the upside, basically in order to confirm that it will continue to the upside, it needs to breach, actually to break this zone over here. Like, let me be just precise. I do agree that it's a pullback, but just let me just be see a bit. I'm gonna get it closer, and I'm gonna stick to the last sessions. This is the 1 minute chart. Yeah, it needs to break. It needs to break at least the 84.75 level in order to confirm that we're gonna continue higher. Oh, sorry, not 85. Sorry, what I was trying to do. I was trying to do 84.75. 84.75. Yeah, it needs to break that. Okay, it's not a great triangle, so ignore it. Okay, ignore it, guys. It's not. Nah, 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 nah. It's not. It needs at least 3 points and not two. Okay, it's not. It's something to keep an eye on. There's a pullback in this 1 minute chart. If that sustains and move up, that could trigger tension higher. But as as long as long as we don't really see extending about 84.75, breaking it, then it's just consolidating, right? Yeah, but I can see what you're talking about. You're referring that this pullback, it will be just a correction before another attempt to the upside, like buying the dip, or just a correction because of overbought conditions. I can see that. I can see that. Yeah, but an entry point could be seen if we see a break of that latest fractal, or that ceiling that we have seen the last 2 hours, the last hour, basically the last hour. The next session is next Friday, is the NFP. So should I be looking for a sell? I cannot really tell. You need to understand from what we have covered today. You need to check your system. I am not allowed to tell you what to do. I'm allowed to analyze, help you see, help you understand how to read the markets, but I cannot tell you what to do, I'm afraid. Because I don't know your risk tolerance. I don't know what system what kind of trader you are, what kind of I am not allowed to anyway. But I'm trying, we are trying as a team over here to give you all the necessary knowledge, to start developing your own trading strategy, your own trading plan, your own system. So yeah. 131.7 after a pullback and sell confirmation. Okay, what I can tell you, Miracle, is that Heikenashi, okay, when we're using Heikenashi, if there are consecutive candles with no tail at the top, so bearish candle with no tail at the top, that shows that the sellers are in control. Okay, if we start getting, so like over here, If we start getting bullish small body candles, it seems that okay, something is changing. The decline has reached to an end. Okay, but right now, what we are seeing is one, two, three, four, five, six consecutive bearish candle, big body ones with no tail at the top, indicating an increasing bearish bias, negative bias. And it's not only that, another negative indication, bearish signal was the fact that the asset managed to extend below this double fractal. This double fractal was our immediate support level, which is now rejected. So now the attention is turning down to 31.35 and 31.20 territory, which is the very next support zone. Okay, because it's an area which used to be significant resistance zone, so now provides support to the asset. And it's not only that, RSI is also below 50, something that's another negative signal. And and it's still in a downwards path, right? This is what I can tell you. Okay, in the 30 minutes chart, it's further down. Okay, if I just change the let me save, by the way, the profile. If I change the template into normal high candlesticks, you can see that MACD turned negative. RSI is close to the oversold zone. RSI the same. There is some doji candles in the last hour, but Bollingers are keep pointing lower. Okay, so that this just suggests a bit of a consolidation before another attempt to the downside. But it is what it is. It managed to form a new low. You see, it broke 3 days support level, 3 days bottom, and it posted a lower low. Yeah. Okay. Perfect. Guys, I'm gonna call it a day because I've been live for an hour and a half. Thank you very much for attending. Hopefully you enjoyed as much as I did. Hopefully I managed to help you and make you understand. Have in mind that is the end of August. So I repeat again and again and again that technicals might matter more this time of the month, because a lot of the big players, institutional players, are uh, repositioning for the new they're changing basically their portfolio for getting prepared for the new month, and that's why we have seen some profit taking conditions. Um so yeah so keep an eye on the technicals, add some support levels, resistance levels, check whether they have been triggered or break, just to be prepared ahead of Friday's session, in which we have the PC, which is a very, very, very important economic release, but also crucially be prepared for Monday's session because it's a new month. It will be the very first trading day of September. So do all your homework, scan your charts, put some support resistance levels in order to be prepared for the new month and the new week. Thank you very much. Have a great day ahead. Take care and see you again next week. Bye bye.